Welcome, and as a result of a few technical difficulties, we're not going to be able to chat to Razia Khan right now. We will hope to get her back in the studio a little bit later, but if we're moving to West Africa now, more than a year after bloody protests and a general strike, forced reform in the Ghanaian government, people say little has changed in the country, which suffers from soaring inflation and rampant poverty.
More than a year after a wave of protests during the bloody general strike brought changes in the Guinean government, people say little has changed in the impoverished West African country, which suffers from soaring prices and high-level poverty. Earlier this week, Guinea's government announced a 60% hike in fuel prices, and anger over high food and fuel costs has spawned a rash of violent unrest across West Africa in recent months, from the deserts of Mauritania to Cameroon, Senegal, Burkina Faso and the Ivory Coast. Residents complain of a worsening economic situation, including frequent water and power cuts in some areas. Food prices, a key factor in rumbling discontent as violent strike, have resumed their upwards march.
Nothing has changed. Here in Guinea, even if all the prices go down, but you keep the price of rice up, then it doesn't help us at all, because rice is all we know here in Guinea.
Sub-Saharan Africa is particularly vulnerable when it comes to food price hikes. Most people survive on less than $2 a day in countries prone to droughts and floods, where agricultural processes still remain basic. According to the most recent official figures, more than half of Guinea's 9 million population live on less than $1 per day.
Everything is expensive. The prices rise every day. I don't know what the people who should be controlling these prices are doing, particularly the finance minister. He's useless.
Lansana Kouyaté, a respected career diplomat, was named as a consensus premier acceptable to both Conte and the unions last year after 137 people were killed in the January 2007 strike. Following his appointment, Guinea's franc initially doubled in value against the dollar as Kouyaté's government began reforming the mining sector and renewed ties with donors, leading to a long-awaited $75 million three-year IMF loan in December. But Lansana's Conte presidency, which critics say is controlled by a small loyalist clique, has chipped away at Kouyaté's authority. Meanwhile, the economic situation shows little signs of improvement. Official figures show inflation falling by more than half in a year to 15%, but a 50-kilogram sack of rice that cost 85,000 francs, then $25 last June, now costs 155,000 francs or $35. The constant currency fluctuations make for brisk business in Conakry's black market. These informal forex bureaux operate illegally and outside the control of Guinea's central bank. Former Planning Minister Ousmane Kaba says the government should focus on finding long-term solutions.
With or without this government, we shouldn't expect a drop in prices for the most important and common foods. The true problem in Guinea is not that the food is expensive, it's that the people are poor. So we should first attack the problem of national revenue, create jobs, and that is a medium and long-term policy. We should concentrate on relaunching the agricultural sector, medium and long-term. That's a very important sector for us, a sector which distributes national revenue for the majority of the Guinean population. We should think of ways to maximize our mining potential, so that this potential becomes a reality, which could push economic growth in Guinea.
Welcome back. And from Guinea we go back to South Africa, and AngloGold Ashanti has upped its forecast production about 8%, which is always good news. And Byron Kennedy joins us now from the newsroom. Byron, it's always good to hear the gold producers coming out with revised forecasts upwardly, given especially the 10% reduction in power that they have to deal with.
I guess what's disappointing is that AngloGold Ashanti share price has been under a bit of pressure. Last time we looked down 0.75%. We haven't had any word out from any of the other major gold players just yet. Gold Fields is down 3/4. Harmony taking some particular pressures today, down 2.25. But disappointing to see that the market hasn't reacted to that news. Just a quick update on how we're looking at the moment on the JSE. The all share up 1.33%, driven in the main by resources. That's up 2%, and the stocks, it's the big boys, BHP Billiton, Anglo American, that are pushing that higher. BHP Billiton up 4%, Anglo American up 3% on the downside. I've already mentioned Harmony Goldfields pulling back. Industrial 25, that's up 0.2%. Barlow World up very strongly today at 4%. The two paper players on the back foot, Mondi and Sati, and the Financial 15 up 1.25%. Old Mutual and Standard Bank leading the charge up almost 3%. Investec down a third.
It's interesting though, if we look at the Financial 15, clearly the rumours around a potential another Chinese bank coming in, getting FNB or looking to buy into First Rand. The share price running on the rumour obviously, but FNB denying that vociferously that anybody's looking at them.
Yeah, there have been plenty of rumours around, and the other rumour doing the rounds is that perhaps it's a hedge fund that was caught on the short side of FNB that's put the rumour into the market that's trying to get themselves out of a position, not necessarily on the short side, that they would have gone long. They're trying to ramp up the price. We've seen that happen in the UK recently with one of the financial institutions. But also an interesting story I saw on MoneyWeb today is that the Make a Million competition that you guys run, a couple of traders have been manipulating the markets a little bit to try and make the million.
It didn't work, and they were caught very quickly. I think one of them used two accounts at the same brokerage to try and manipulate some share prices.
They call it round tripping.
Something along those lines, yeah. But the FSB coming out saying, look, we did find them out, but they were very inexperienced, and a big rap on the knuckles there. But interestingly as well at the FSB, and you head of it, Dubi Chidi coming, he was the deputy, replacing Rob Barrow as the head of the FSB, so we should be seeing some changes there as well.
Yeah, very slight slap on the wrist for those three traders, I think, involved in trying to win that Make a Million competition. Fines were about 10,000 Rand apiece.
Which is how much they had to pay to get into the competition in the first place. Well, that's all from Power Lunch, Byron, and that's in association with MoneyWeb. We're crossing now to CNBC US for US Squawk Box. CNBC Africa back at 4 p.m. Central African Time with Regional Roundup.